Alright guys, in this video I want to guide us on how to simply enter a trade or enter the trade like the continuation trade you're seeing now, because this is the synthetic indices. We don't have a playback, like the major forex where you have the playback mode in the trading view. This trading view is just a straightforward trading view. There's no way you can do a playback here. Now I want to show us how to get into this trade, because if you look at the daily bias, we are bullish, very very bullish. So how do I join this trade? Because there are so many things we would consider before entering this trade. Now before I go into that, we have time frame alignment. Time frame alignment is when you are doing your analysis on the higher time frame. The normal time frame for your entry, or the structural your entry, is supposed to be aligning with that higher time frame. Like if you're analyzing the chart with the weekly time frame, your entry time frame is supposed to be the 4 hours. If you are doing your analysis on the weekly time frame, your entry time frame is supposed to be the 4 hours time frame. Also, if you're analyzing the chart on the daily time frame, excuse me, you're analyzing on the daily time frame, your entry time frame is supposed to be the 1 hour time frame. Then if you're analyzing on the 4 hours, your entry time frame is supposed to be 15 minutes. Now this is the daily time frame. So if you're analyzing with the daily time frame, what do? We have to go down to the hourly. This is the daily time frame. Now the price is currently inside a fair value gap. Now this is the fair value gap. This is the fair value gap. Here is a fair value gap. As you can see, we have a strong rejection. Before the rejection came in, we see where price was coming from. Price came from this region. Price came from this, this strong sell, then traded into a fair value gap. Remember, in forex, price usually move from external liquidity to internal liquidity, and so on and so forth. So that is how price move. Price move from, if you look at the market very well, you see that this area, we have a fair value gap in this area. If you look at it very well, this is a fair value gap, and as you can see, price traded into the fair value. We have two fair value gaps. We have this large one, we have this large one and the smaller one above it. So price used both fair value gap to trigger the expansion we are seeing now. This is the expansion. You see the expansion, this expansion. Now this expansion you're seeing to the upside. Price traded into the fair value gap to trigger this expansion, this strong move we are seeing now. So how do I trade this? I want to enter this trade, but I don't know where to start from. First thing first, you have to look at the chart, look at how the price move. Price normally move from, this is the fair value gap is known as the external liquidity area. Why? The swing highs, the fair value gap is the internal liquidity. Why the swing highs, as you can see, they are the external liquidity. Like price move from the the external liquidity to internal liquidity, from internal liquidity back to external liquidity, from external liquidity back to internal. Like this area now, this is a fair value gap. Look at price moving from, this is fair value gap. Now this is internal, from external to, you look at this is like an order block. Price came into an order block in this area, you know external to internal to another internal. Now we are looking at, this is now an external, because this is a high that was created here. If this price comes above this now to sweep this high, that means we are looking at price pushing down into another external, another internal liquidity before going for an external liquidity. So price moves from internal liquidity to external liquidity and back to internal liquidity. So that is how the thing works in the forex market. Now, how do I join this trade? I want to trade. I just want to enter this trade. Before the formation of this candle, we are already looking at a fair value gap. Now, the time frame that is aligning with the daily time frame, the entry time frame that is aligning with the daily time frame is the hourly, is the 1 hour time frame. So we will break down to the 1 hour time frame to look for a possible entry. Now looking at the chart on the 1 hour time frame, This is how it is on the 1 hour time frame. Now this is how it is on the 1 hour time frame. So price is already inside the, this is the daily time frame, and it hasn't gotten to the midpoint. But currently, the at the in the 1 hour time frame, we have something like this. We have the fair value gap. This is the fair value gap. Like I said, price moved from external liquidity to internal liquidity, and as you can see, this is an internal liquidity, the fair value gap here. We have this fair value gap and another fair value gap, same in that same range, but there's a gap in between. So we'll pick, if you look at it very well, price, you know got rejected in the first fair value gap. So this one is invalid. This one is invalid. We saw the multiple rejection. We look, as you can see, price, started bouncing. The price bounced multiple times, before the continuation. Now I want to enter this trade. I want to enter the trade in a position where my stop loss will be small and my take profit will be huge, because we have an all-time high. This is an all-time high that price has created, on this move. Now I'm looking at price coming back to this area. So how do I enter this trade? Now if you look at this leg, if you look at this move, this very move, now you see it's a strong move into the internal liquidity, which is the fair value gap. We look at this move now, it's a strong move into the internal liquidity, this fair value gap area. So how do I trade this? Now before, as in this move, if you look at this move, we have, this strong move before this bullish candle, then another candle here before this, this expansion. You understand? So now I will bring my tool, my I'll bring my horizontal tool here to mark, to draw a line. I will draw a line here. I'll draw a trend line on this, the last bearish candle, because this is the last down close candle before the expansion. Now I will draw a line on this. Then remember I said the 1 hour time frame is supposed to be in line with the 5 minutes time frame. So if I'm doing my analysis on the 1 hour time frame, my entry is supposed to be the 5 minutes time frame. So I will go down to the 5 minutes to look for a perfect entry. This one, my stop loss will be so small, but my take profit, since I'm targeting the highs that the price came out from, my take profit will be huge. Now going to the 5 minutes, as you can see, what happened, we saw price kept printing lower lows. If I bring this trend line and place it here, you can see price kept printing lower lows. Price printed this low. As you can see, price printed this low. This is the first low price printed. It gave us this low, another lower low, the third lower low. This is it. Drawing it on the trend line, you can see the lows kept, this low is higher than this one. This one is higher than this. So this is lower low, lower low, lower low printed before this move. Now, if you look at it very well, we have an expansion here. We have an expansion here. Look at it. When price printed this lower low, the last lower low, this is the last lower low. Now this is the last low price printed here. Making price printed this low, we have an up close candle. You see, price gave us this up close candle. This up close candle is now serving as our order block. Now if you bring my rectangular tool, making this place my order block. Now this is my order block. Then what am I supposed to do? I'll take my entry now. Since price has given me this, and I see price moved above it, price has given me a change of character. This is now my change of character. I have a change of character in this area. This is my change of character because price has gone above the last low created. This is the last lower high created. This is the last lower high created. Price went above it. This is the last lower high. Let me remove this. Let me take this one out. This is the last lower high. See, this is the last lower high created before this lower low. This is the last lower high. Even if I pick this one, if I come here to pick this high, this area, you see there's still a change of character. If I pick it here, like If I pick it here, it's still a change of character, as you can see. But this is the last. You see this um consecutive red candles, this 1 2 3 4 consecutive red candles, is supposed to be the order block. This is supposed to be the order block. So price came, tested the order block, continue pushing to the upside. Now, where am I supposed to place my entry now? My short or my long is supposed to be on the order block, and my take profit, my stop loss below the swing lows, because I know this low is already protected. Then my target now, my target is now that high is where the price came from. You see, all the way to that high, all the way. That is roughly um um 9 arrow, 1 to ratio 9. Can you imagine the profit? Imagine the profit. Look at where price came out from. And if you look very well, that is exactly where the price returned, returned back to. And if you look at the entry and your stop loss, the stop loss is very small. This is the best way to trade, to trade this forex market. This is the best way to trade, with a very little stop loss and a very massive take profit. If you can analyze the chart from this level, I bet you'll be making loads of profit from the market. The price, you'll be getting a lot of profit. But this one, it usually comes once, like one, you can get it 1 to 3 times a week. If you can analyze very well, do your analysis critically, you'll be able to hit the market every now and then without getting stopped out. You'll be able to hit the market, week in, week out, week in, week out, without getting stopped out. Remember I said this is our order block, and as you can see, where did the price hit, our entry, the price tapped into the you know into the entry here. Look at the first entry, then price came back and tapped into it and continued buying to the upside. You understand? So this is one way you can easily analyze the market, analyze the chart, and place your entry and make something huge out of the market. That is it, guys. So if this is your first time of seeing my video, if this is your first time of seeing my video on YouTube or on TikTok, you can subscribe to this channel, drop your comments, just hit the like button, drop your comments. You can turn on your notification so that anytime I drop a video like this, you'll be the first to be notified. All right, guys, I'll be seeing you in the next one. This is Mickeysfx Academy once again. You are welcome to the channel. You have a nice day.